All right, hey everyone. It's Tim. It is 1:50 on March 21st. Back with you after a long trip to Europe with a large group of teenagers. There were 42 of us that went over there and spent a lot of time touring. So we moved around a lot and therefore have been out of touch with these videos and out of touch with all of you. So I really do appreciate the patience and understanding as we went on that trip and have come away with a lot of really positive things to say. So and with that, a lot of clarity and perspective comes to you whenever you're away from the trading screens. It's really amazing how staring at screens all day can change your perspective and what you can see when you come back and just how different it is. So with that, let's just jump through here. And look at the charts and see exactly what it is that we've been looking at. Jeff and Phil have done a great job while we've been out of the office, and not a whole lot has changed from the overall perspective. We're bearish. We see no reason not to be bearish. The developments over the last few weeks have only served to increase that bearishness in our opinion. And just because we're continuing to work lower doesn't mean that we think that we're getting any closer to a significant bounce. Now, having said that, of course, markets won't go in straight lines, and they're going to move around and they're going to bounce from here to there and give us some opportunities. But for today, we still think we're looking lower and don't see any reason to change that. And here's one of the reasons why. This is November soybeans, okay? And what's significant about this is two things. First of all, if you look at the new crop corn bean spread, and let me pull that up here. Here's that spread for us. Remember, 2.4 is really about equilibrium, where from a revenue standpoint, beans and corn would be about the same. Well, here we are, we're working our way lower, which means beans are getting cheaper relative to corn, which means that the market is saying, hey, we don't necessarily want the beans to be planted. And remember, this is a big deal, and it's what we've been expecting because of the crop size in South America and because of the just the overall lack of demand situation. And new crop beans today have this big significant development. This is the downward trend channel that has been working since January, and today we broke out the bottom side of it. And the reason that that's significant is because that usually means that we're going to see an acceleration to the downside, and I would expect this one to put pressure all the way down here at the 1219, 1220. And so a lot of people are going to say, hey, beans have been down 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 12 days in a row. And over the last, since February 22nd, new crop beans are down $1. Well, that doesn't mean that it has to bounce. It really does not mean that we have to go forward and rally. And in fact, if you look historically at soybeans, when they really do break hard, they don't rally. They just continue to put pressure on anybody that's long and just hurt you really bad. So this is why we've been worried about beans and why we've wanted to be hedged for quite a while, and why we don't see any reason to unhedge ourselves or to take any shots to the upside here. In fact, we think this is going to probably go ahead and accelerate lower. Obviously, the first thing it has to do to challenge that opinion is get back up above this trend line. So we would expect a little bit more down, then a challenge of it, and then probably more down from there. But nothing about this looks good. In fact, this looks like a 1, 2, 1, 2 count, and this is wave 3 of 3 starting, which should cover the most distance in the shortest amount of time. So we're bearish. New crop soybeans. There's no divergences on this chart to speak of, not in stochastics, not in RSI, not in the MACD. There are no divergences, and yeah, you can say that they're oversold and that maybe they should, that'll correct itself, But remember, these things can stay oversold for a really long time, and even a small rally of the RSI back to 40 or even 60 is just a sell signal, not a strength of an uptrend. So this is a downtrend. There's no question about it, and the trend is your friend until it's not. So short we should stay, and short we should look, and we should even talk about upward opportunity in soybeans at this moment. Old crop. All right, so here's old crop. Let me clean this up a little bit for you. Obviously, today was a big day, right? And in fact, all of these days here are interesting. So let's just kind of walk through it. So on this day here, this is March 7th. This is a bearish engulfing day. We traded up a little bit. This full body completely engulfed this full body. So therefore, it's bearish engulfing. You would expect more downside. Well, the following day, we have a reversal, and it's called a piercing pattern, where we actually have an outside day up, and we reverse. So that should be bullish. Then we follow it with another bearish engulfing day, and then another day down, and then this big, giant bearish engulfing day, and then a piercing pattern. Bearish engulfing day, piercing pattern, bearish engulfing day, piercing pattern, bearish engulfing day. So beans are the net result of all these reversals, right, is a down move of from 1537 all the way down to 1462, right? So huge down move, even though each basically every other day here has been a bullish reversal of some kind. The market's just being met with selling. And today is significant because today we really definitively tested, tried, failed at 15, and then reversed back outside of our cloud. So like old crop beans, we're looking lower. And I'm going to put this trend channel on here so you can see it and compare it to November, okay? Remember, we're going to snap from this high to the intermediate high right here. And then we're going to put this at the intermediate low in between. So now we have this downtrend channel, and old crop beans have not yet broken it. If we break 61, and then tomorrow this downtrend channel comes into play at 1455, the day after that, if old crop beans break below this lower boundary line and accelerate lower, then I think beans are going old crop. You know, we could exceed $13 real fast on old crop beans if we're not careful. So nothing to the upside to look for here in our opinion, and it's going to take a move back up above all these highs in order to change our mind. All right, so let's look at corn. Surely it's got to be more bullish, right? I mean, hey, it's been up. No dice, none whatsoever. In fact, what we're looking at is this being the end of a corrective move. Maybe we get one more push, but I doubt it. I think if beans break, corn's going to go with it, and off we go. Now remember that profitability comment about beans, where $13 is the cost of production that a lot of analysts are using in new crop beans. Well, we're now at $12.96, which means we are below that. So if the market continues lower and makes beans uneconomic to grow, the question is what happens with acres? Where do those acres go? Well, the most likely target is to go to corn. And as we've been looking at our balance sheet, we don't need any new corn acres because we're already headed to a carry out closer to 2, if not 2.5 already. So the market's job is going to be to discourage any new corn acres, especially if beans are puking them up. So I think that's bearish old crop corn, that's bearish new crop corn, that's just bearish corn all the way around. So corn is really a layup here below 645. You want to sell it and be short below it and not look for anything to push ourselves back up. Remember what I said on the RSI from beans is that a move back to 40 to 60 is the sweet spot to sell it. Well, look what corn's done. Corn made a new low, was oversold, bounced back up into that area, and here we are with a bearish engulfing shadow and an outside day in a bearish reversal day here anyway. So I'd look for corn to roll over here as well, and see no reason to step in and buy it. In fact, if it does bounce, you know, we're gonna look to sell it a little bit higher, even if it does that. Okay, let's look at new crop corn, because surely it looks better than the other ones, right? Nope, certainly not. No dice whatsoever. In fact, look at the downtrend channel. Look at what we've done. Here's the downward trend line. Here's the intermediate low where we connect it. Here we are trading below it. We've now tested it. We failed today and traded back down below it. I think that's bearish new crop corn. And certainly if the cost of production for beans is above where beans are trading, then corn is going to work itself lower there too. So hedged we go. So you know, I know the last month or whatever we've had a lot of issues and been out, but in a way that's a good thing because it keeps you away from the day-to-day Twitter and buzz and all that stuff. And if you're reading it, my advice to you is just stop reading it. Stop doing that. Because the market's being very clear with what it wants to do here, and that is work itself lower. So from a hedge perspective, stay hedged, and if you're not already hedged, then increase the hedge size that you've got on and get that downside risk out of the way. Basis is still pretty firm here in the Kansas region. You know, we were just so short from last year. Basis is probably not going to fall out of bed real soon. But it is weaker than it was, and I think the best we could call it is stable, or at least not quite as volatile. So if you're sitting on it, I see no reason not to sell it. If you are looking at new crop stuff and you've got a good basis, I see nothing but risk in that basis moving forward if we do end up with the crop size that we are looking at. So we have to just continue to pound that bearish drum on corn and beans. And so now let's look at wheat. Here's new crop wheat. And this is the November contract. Let me clean this up, get some of the stuff off of here so you don't have to look at it. Here we are, right? We're clearly bearish this market. We've got a big down move and a nice little rally to the bottom side of our cloud. A big reversal day today where we have a big upper shadow. We reversed right at our Astra hedge line below our cloud. Wheat's a sell. It needs to be sold. Force Index and RSI are both into the sweet spots to sell. Here we are with the RSI at 40. Between 40 and 60 would be your sell zones. So this little rally is a counter trend rally ready to be sold, and we should look for lower lows and ultimately for a move down below this 763 low. Where will it come to? Well, let's try to guess. You guys know me. We're not going to spend a whole lot of time trying to guess forecast because you know it is what it is, and we're not going to try to necessarily catch the bottom anyway. Well, why isn't this going to work? Well, let's try it here. Well, maybe it doesn't like it today. Well, I'm not sure what's going on here, but bottom line is if we look lower here, we should look at least for this to equal this line, so 891 down to 763. So another $1.30 from 829. So we're looking at $7 is kind of a low here for at a minimum on new crop wheat. So again, same thing as corn and beans. You know, just because it's already sold off and already low doesn't mean it cannot get lower. And in fact, that's what we're looking for these grains to do, is just keep the pressure on the longs and just force people to exit positions because the market has no reason to bail them out at this point. All right, so it's good to be back with you guys. Remember, there's lots of risk in trading commodity futures and options, and you should only do so in light of your own financial condition. We'd love to talk to you about where you're at and what we need to do to get you to the right spot and where you're comfortable. If you have questions, please give us a shout, and we will do everything we can to help. Hope you guys have a great night. We'll talk to you again tomorrow. Probably around mid-morning as the market's trading, and we'll just kind of keep you up to date on what we see. Hope you guys have a great night. See ya.